We're getting a lot of mixed signals in the market right now, so in this video we're going to sort them out to figure out what's happening. And also Bitcoin is back in play, which is of course going to affect things, including my Twitter timeline, which is once again super annoying. But we're going to talk about that a bit too, because like I said, it does have an impact on the stock market. So as always, to review the market each week, we're going to use our research from MacroOps, our global macro research and consulting firm, which is nearing the top of its 7-month sideways trading range, which has been rough. If any of you have owned semiconductors like I have, not fun. But semis are typically a good lens on general risk sentiment and often provide a lead on the broader market. So where these chips go, the rest of the market follows. So as we said here, they are nearing the top of their range, meaning they might be getting ready for a breakout. But if you take a look at breadth, which again, huge theme in the last few months, there's a continued deterioration. So breadth is falling, and that's not a good sign when breadth isn't moving with price. So if we see semis break out here to the upside, then we'll want to see that breadth confirm. And again, breadth is an indicator of market internals. So in particular with breadth is how many stocks are moving together. So in a healthy market, you're seeing all the stocks move together, and that's why you're seeing higher prices in the index. But what can also happen is that you have a few big stocks moving higher while the rest is falling. And that's an unhealthy market. So when you see price rising but breadth is deteriorating, that's kind of a signal that, hey, price may not stay up. It's like having cracks in the foundation of a building. Eventually the building is going to fall if the base isn't strong. And that's the theme that's been happening not only in semiconductors, but in every index as well, which you're about to see here. So the NASDAQ closed at all-time highs on Friday, but once again, breadth has not followed the tape. It's at levels that typically come after large corrections, not all-time highs. So you can see this blue line right here is short-term breadth, and it's falling, hitting this red line. And every time it's been below that red line or hitting it has been major bottoms in the market. So it's odd to see breadth so bad at a new high. And this is once again the type of mixed signal that we're getting in the market. A lot of the times the market is unclear, like right now. It's actually more rare that you'll see something that's like super simple. So we'll talk in a little bit about how to deal with that. We're seeing a similar situation in small caps where breadth is also incredibly weak and at levels that typically coincide with bottoms following larger corrections. Once again, same type of chart here. This kind of breadth is seen at bottoms. And as we know, small caps have been stuck in a range. So we actually ran a back test to look at past instances when breadth was this weak, but the index was still above its 200-day moving average. So the yellow dots you see in this chart are all those times that it's happened. And what we found is that it's actually a positive signal. So out of 22 instances, 68% saw positive returns over the following 20 trading days, with an average return of 7.25%. So given that, there may be a higher probability that the Russell breaks out from here. But again, this isn't like a huge signal, right? This is just some interesting data that we were looking at because of the weird signals they were getting in the market. So sentiment traders shared a chart looking at the correlation between small caps and technology, and it's actually plunged. And it's at levels seen only one other time over the past 20 years. So what does that mean? Well, according to their back test, this also tends to be a bullish signal. 70% of the past occurrences over the last 90 years saw positive returns over the following month, and 80% over the next 2 and 3 months. So once again, positive signal for small caps. The thing about looking at data is that you want to put some type of reasoning behind it. Stats are stats, right? So while this stuff is interesting, I couldn't really tell you the reason why that works like that. Now, like we'll talk about in a second here, I will say you should never think that you're smarter than the market. And sometimes investing in a trend that makes no sense to you is actually a good investment. But all I'm saying is when we're looking at these stats, use a little bit of caution. And just because it went higher 70% of the time does not mean that we're going to fall in that 70% this time. There's still a 30% chance that it doesn't, right? But this stuff is interesting nonetheless. Long term, we're still clearly in an early to mid-cycle market. And when I say long term, I'm talking about zooming back and seeing years. So there's still plenty of strong tailwinds to keep driving things higher over the next couple of years. And the correction that we've been talking about for the last few weeks, if it happens, it is more of a medium-term correction for a few months. The general bull is still intact. And one of the tailwinds keeping that bull intact is buybacks. They're a huge driver because buybacks really influence the demand part of the equation when we look at supply and demand in the market. Because remember, everything just goes back to that Econ 101 concept. If you have all these corporations with too much money because of low interest rates and whatever, they are going to keep buying back their own stock because they want their own executives to get paid. So that buying pressure and all that money will push prices higher. So Alex, our lead researcher, he says that these charts from JP Morgan show that the most important fundamental is alive and well. And the most important fundamental that he's talking about is liquidity. How much money is sloshing around in the economy that can push prices higher? Because it all has to go somewhere, right? So it often goes to inflating asset prices. And once again, companies with a bunch of money, that's the same thing. That buyback pressure just pushes stocks higher. And you can see there's a bunch of charts right here supporting the buybacks are coming back, but I'll just look at this one right here. You can see this blue line just rebounding from the COVID lows. That's a great sign. In addition addition, planned capex, which is capital expenditures, like how much is a business reinvesting, say to build new factories and things like that, it's at its highest level in decades. And capex is a critical component of earnings growth because, again, if you're investing more in the business, your earnings will go up if you could produce more. And this is being supported by an easy Fed policy, which is keeping interest costs low for US corporates, which again was the same thing we're talking about why there's so many buybacks as well. Now, as we already said, the NASDAQ is hitting new highs, but breadth is still very weak. So it's an interesting market because we also have a neutral read from the credit markets. So it seems like we're seeing our buy climax scenario and our summer doldrums scenario play out simultaneously. And there's not much to do but to try and play both sides of these trends. Again, mixed signals, unclear market. And you want to play both sides until we get some greater clarity about what's going on. So what's the difference between our buy climax scenario and our summer doldrums scenario? Well, the buy climax was that intermediate top that we were talking about. And the idea was that people would buy until everything rolls over and we get our correction, and then we get a few months of just sideways volatile movement. Kind of like the 2018 market where we ended up flat. That's what we're expecting to see in this buy climax scenario, because back then the buy climax happened in 2017 towards the end. And then in 2018, January, February, March, it started getting rough. So that was the one scenario. And then the summer doldrums was that we just see volatility all summer, just sideways movement. So the buy climax wouldn't play out. So that's what seems to be happening right now. And what makes it even more interesting is Bitcoin coming back into the mix. And Bitcoin has been really interesting because it's another risk asset. And if you remember when we were talking about a buy climax months ago, it actually got ruined by the surge in Bitcoin and cryptos. So all the money moved away from stocks, prevented the buy climax from happening, and piled into crypto until crypto, it went through its own cycle, peaked around the Coinbase IPO and then fell again. And then money came back to stocks and we saw AMC take off again. And then, of course, our buy climax scenario was back in play. But now Bitcoin has some life again. So you can see the action recently, it fell and then kind of consolidated. Now it's rebounding hard. Like I said, this affects stocks because oftentimes it takes money away from stocks. So you can see, like Alex says here, it looks to me like Bitcoin and likely crypto in general has put in a tradable bottom. So Bitcoin had every chance to break down, but it didn't. It's 30,000 level held. Now this is a weakly held opinion and we could change our mind if things actually reverse and break lower. But like I was saying, this whole price area held, and now you might be seeing the rebound. And if you're not trading crypto directly, one way to play it is through this ETF GBTC, Grayscale Bitcoin Trust, because it continues to trade at an incredibly steep discount to net asset value. So that's one way to play this rebound. But what will be interesting to see is if this rebound comes back, what happens to stock prices? Because right now with the S&P, we still have our target of 4420. And right now the market is at 4402, so it's getting close to that place, which is only, a few points higher. And this was kind of our buy climax scenario. It runs up to there and then turns around and then we get sideways action. So I'm wondering if this rebound in crypto will just kick off that correction sooner rather than later in the equity markets. Because we also know that breadth is terrible in all these markets too, right? And that's kind of the mixed signal. Bad internals, but price keeps going higher. So if crypto comes back, that might be the final push to have the money flood out of stocks back into crypto. Then you see everything kind of fall apart. Will that happen? We don't know. The correlation between crypto and other assets continues to change because it's so new. So this is what happened to our last buy climax, right? Like I was saying, money left stocks, went into crypto. Doesn't mean it's going to happen again now. It's still too volatile to really say that that's the correlation that's going to happen every time. So as I said, things are a little muddy right now, and that tends to happen in the stock market. And what's great to remember during these times is that you are never smarter than the stock market. That's a trap that a lot of people fall into. They think I can figure this out when really it's the most complex system in the world. So you might get pockets of clarity, but most of the time it's way more complicated than what any of us can understand. And that doesn't mean that it's impossible to make money, of course not. But all I'm saying is stay humble. It's okay to say, I don't understand what's happening. And that's a big reason that I'm a systems trader. Once the system is built and it's back tested and it has that robust edge that's going to work in any type of market, then I don't worry too much about trying to figure out exactly what the market is doing right now. Instead, I just depend on the system that was built. And you guys know how our Fallible system works. We have this TSI algorithm right here that basically ranks all our stocks by their momentum. And then every month we rotate into the top 5 stocks with the highest momentum. That way our portfolio is always moving higher. Now, because it's the end of July and almost August, we have a fresh rotation coming next week. So if you don't know how our system works, make sure you check out our free training right here. I'll put a link to it in this video and down below in the description and comments. But we got a free training that will teach you exactly how it works and how we use it. This is the same one that I use and all our Fallible members use as well. And like I said, it makes life a lot easier, especially in unclear markets like this one. And if the NASDAQ is taking off, like we said, it did hit new highs, it can keep keep going from here. The market internals can follow after. And for the last few months, market internals have been bad, but now is a great time to start using it and catch this upswing. So again, if you want to learn exactly how it works, click this right here and go to our free training. It is absolutely worth starting systems trading right now if you haven't already. It's going to make your life much easier. So click right here and I will see you in that training.